Good morning. Welcome to the Gimbal weekly update. We are thankful that you joined us today, and I'm going to share with you our disclaimer as soon as I get smarter than the system here. It is right over there. I see it. It may not be let's try that, see if that does it. There we go. Hopefully you guys see this. Or no, you don't. As you may know, Amanda is not here today. So we'll get right back to this thing. We have no crystal balls. Do not use putty as earplugs. This is strictly our opinions. Content provided at this event is for general information only and not intended to provide specific advice and or recommendations for any individual. Any performance reference is historical and no guarantee of future results. No guarantees, Doug. All indices are unmanaged. There's a joke in there, and may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful, whether that's a buy and hold strategy or anything. It will not be guaranteed to be successful. These thoughts and opinions are those of Gimbal Financial and do not represent those of LPL Financial. Securities are offered through LPL Financial, member FINRA and SIPC. Investment advice is offered through LPL or Gimbal Financial, a registered investment advisor, and a completely 100% separate entity than LPL Financial. And welcome to Friday Without Amanda.
It was early on in working with you. Like I started working with Keith in 2003. I had about 5 years in the investment business prior to that, thanks to my Uncle Jeff encouraging me. But the opinions piece about our disclaimer there is a really big deal. That was a lesson I had to learn early on here. And I'm thankful for one of you who basically called up one day and said, we need your opinion. And so right. It's important to have an opinion. And it's increasingly difficult to have an opinion these days because there are so many regulations. And so you may have an opinion about something, but you could be in a heavily regulated industry that says, you can't talk about your opinion. And so just know, if you want an opinion about something specifically, we've got them. We may not be able to talk about them specifically on air here, but we've got them. And just if you want to get deeper, call us. We'd love to talk about your 401k. We'd love to talk about your specific stock you're looking at. If you have an interest in specs, we want to, is that what it's called?
Specs. We'll talk about
I'll talk about that. Yeah. If you have an interest in specs or whatever they're called, we'll talk about it. If you have an interest,
I find myself need more specs as we go. So
if you have an interest in crypto, we'll talk about it. Just give us a call. So to have an opinion, you all have opinions? You all have opinions about your money? I'd love to talk opinions. So anyway, sorry I went off opinions there, but thanks again to that guy who did call in back in like 2004 maybe. And he's like, come on, man, you got to give me your opinion.
Well, and we not only investment side, we had Denny Mormon was the guy at Hilliard Lyons that said to me that we're often right, we're often wrong, but we're always certain. And he was expressing the idea that we always have an opinion. And
how many opinions out there are said with certainty?
Yeah.
Yeah, they're like absolute.
Right.
Come on.
Yeah.
Really?
Yeah. I think our culture, but we'll step aside from financials. I think our culture would be better off today if everybody realized that they do have an opinion.
Yeah.
But they're often right and they're often wrong. So that my opinion isn't necessarily always right. It's just a point of view for which I'm taking today, and it could be wrong tomorrow.
Oh yeah, probably. Especially yours.
I am thick-skinned. Yeah, it takes a lot to get me stirred. Let's jump into some interesting stuff. We noticed quite an improvement in the overall market this week compared to last week, where we saw it kind of turning. We, as a entity, Gimbal came a little bit out of the markets for some of you, and we came back in a little bit last week as well, because we just saw institutions moving more money into the market, and we're nearly behind a lot of that kind of sketchy fall time frame and heading towards the year-end surge for the final couple
and we
months.
call that an uptrend.
Yeah.
And basically an uptrend is, it's simple. Things are moving up. The prices are moving up. The amount of buyers participating in the marketplace are moving up. And so we have ways to track that. You know, we track it every day. Who's buying stuff? What are they buying? What general markets are looking good? Which ones, you know, are still hesitant? So an uptrend, that we've been in an uptrend for what, a week now? Did it start last week?
It probably the 15th is when we first kind of moved into that direction. And with that, it's not saying everything's just green light straight
That's
ahead.
right.
And I thought I'd give you some examples of that today. This market has been really challenged all year. I think 2021. So if you've been in the pure indices, which you can't do completely, you've done fine. But if you've been in some broader things,
Yeah, like the S&P.
The S&P,
pretty much kick butt.
the
I mean,
NASDAQ,
NASDAQ.
S&P 500, the S&P 600. If I share this with y'all real quick. The S&P 600 over here is just it's trading basically flat, and so that's not indicative of what was going on say the NASDAQ, where that thing has trended upward all year, or the S&P 500. I don't know if I'm moving too fast for you guys computers to keep up with this, but you can see the diversity in those different individual markets. But what I was going to show you, this is what and none of these are recommendations. This is all historical data. It is readily available out there, but I just want to give you a feel for what's going on in the market. Here we have Intel, who had a good run up until March, and then they were doing really horribly from March until October, and then they had a really bad day today. You know that, is it Daughtry that says they had a bad day?
Yeah,
That's a bad day right there. That stock dropped 11% since the market opened.
We call that a gap down, and it's basically where market closes one day, everything's happy, and then it opens up, and there's a big space in between the price that closed and the price that opened. Not a lot of fun. Oh, that's another one. What?
I was going to, it was like the 1986 All-Star game here in Indianapolis, and the fellow that I was riding with to this game left too much of space in the parking lot, and the parking attendant told him, "You left too much of a gap there." And my friend said, "You mean like the one between your front teeth?"
Man, that's not, he needs to win or read How to Win Friends and Influence.
That was just an opinion. It was so off character for me. Anytime I hear the word gap, I have to filter that out. Sorry to share that with y'all today, but that was what it was. So there was that. How about this?
Yeah.
Another bad day. That's Snapchat.
Yeah,
down.
The shrink kids
23.
can't have that. I wouldn't be opposed to them owning the stock at times, not today, but
Yeah.
they definitely can't have that on their phones yet. I mean,
Yeah, that's a 23% drop in a day. This guy was having a bad day. We should be able to hit those buttons to have Daughtry sing for us. So it's down 3% today. This guy was having a bad day. And it's not down as much, only 3.7%. There's a theme with some of these, that there's some tech stocks. Here's 4.19 for Pinterest, and you guys do that Pinterest stuff. Now here's something that's just mind-boggling to me. We try to stay away from political conversation, but yesterday, or 2 days ago, Digital World Acquisition Corporation was trading at, I'm going to give you the price, $9.95. Right now,
I think I know what this is.
Right now, you could buy into this for $130, which I would highly discourage you from doing that.
Sounds like an Elon Musk rocket going up into space.
A number of months ago,
I land soon too.
I came up with this. Hopefully, y'all can see this here. I came up with this thing. I'm looking for it here. I don't know if you see this right here. This orange. It says WTH. What the heck are these?
Yeah.
I couldn't figure out what these things were. I was
Yeah.
looking at them, and they were shooting up. Let me get my arrow going again here. They were shooting up. This thing went from 10 to 15 in a few days, and then this one, it did the same thing. It shot up to 40% in a day. This one shot up. I did it recently over here, and I did it over there. Joby Aviation over here. This thing had to shoot it, and I had to, because I didn't know what they were. Look at this one. It shot up threefold in a couple days, and then.
Do you notice a trend there? They all start at $10.
Yeah.
And it's interesting, like Keith and I, we don't do a lot of planning for this show, if you haven't noticed, collectively, but individually we do. And it's interesting that you're talking about these things because you can't see it in my notes today. But guess what I was researching this morning?
You were SPACs, blank check companies.
That's exactly right.
Yeah.
That's exactly right.
Well, they hit my radar probably 6-8 months ago, and that's why I created this particular group of stocks. And what I think they basically are is a group of people say, "Hey, we're going to make a lot of money."
That's right.
And we're going to create this publicly traded company, and we're just going to put money in it.
Yep.
And then go do something with that money.
And they have no idea what they're going to do with it, except we're gonna just swing for the fences.
And some of these, I think all that happened is I don't even know if they'd made any acquisitions with the money, like this one over here where it went from 10 to 19. I think they just started hyping it, and so the hype of the market drove those things up. And so here we go to Digital World Acquisition Corporation.
I mean, who branded that? Digital World Acquisition Corp.
Gimbal World Headquarters. So the news is, if you haven't seen the news, and I took journalism for a lot of semesters, and I have some journalistic opinions that I stick to pretty closely, and I don't think we have much journalism anymore. But former President Trump is creating his own social media platform, and he's going to use this platform, Digital World, along with something else to create this thing. I don't know if it's going to be called Digital World Acquisition Corporation or whatever, but I knew that this stock yesterday was a bunch of hype. It's hyped it up today, very speculative, and people will probably lose a lot of money on this thing because they get the culture gets sucked into these things. But the good news on this idea to me is I think having different possibilities of communicating your ideas on the social media, besides just some conglomerates that are controlling those thoughts, biasing those thoughts, I think it creates a great opportunity. And maybe this might have something to do with those stocks that I said were down earlier today. It might be that there's some competition coming to the market, because we had Snapchat was down, Facebook, Twitter. Maybe competition is the reason. I don't know. It's hard to know.
I don't know either. And when we talk about SPACs, it's really interesting to me because historically, if you wanted to bring a company public to the stock market, you had to go through a big process to do it. And so these SPACs are basically, through technology, they're creating efficiencies that just, they skip the regulations. And I'm not saying that that's a good or a bad thing, but I'm telling you this, the market will look for a way. The marketplace will look for a way to be more efficient, to be better. And the SPACs, kind of like VCs, venture capitalists, coming out of 2008, 2009, when banks had all this money to loan, but they weren't loaning it, the market started to look for other ways to get capital. And this is just one of those ways, basically collecting a bunch of interest, collecting a bunch of money, and then they go out and do something with it.
Well, it's a brave new world out there. It is an equalizing force. Not only that, you might have other social media avenues out there, which I think is going to be really positive. That's why we didn't just have one newspaper in the day. You had a local newspaper and had all these things. So the idea that competition can come to these major technology things is really good, I think. I think the possibilities of being able to access capital in different ways is really good. It occurred to me probably a decade ago that there probably would be a way to specifically do mortgages like that. Maybe I would finance LJ Shreve's mortgage or something like that.
Feel free.
Yeah, start with a college, right? but
Like we couldn't even do this radio. I was about to call this a radio show. We couldn't even do this Zoom call, the Zoom webinar, unless somebody broke through the mold.
Yeah, and
there'd be FCC hurdles, all kinds of stuff.
It's pretty amazing to think what can go on and the possibilities that freedom gives us. So yeah, it's great opportunity. The markets, so shifting a little bit from the markets look stronger in some areas. If you're in the wrong place, it's dangerous out there still just like those stocks I showed you today. It's high school football season, or is that about over? Is it still high school football season?
Is, yeah.
Yeah, so this is, that season comes and goes, and then it'll be high school basketball, then high school baseball, but this is earnings season. And a lot of those companies that had that disappointing stock price today, those were earnings that might have been announced yesterday or so. And so there's not really any reason to feel like I got to do something today. I got to do something today. And when somebody feels that way, a lot of times it's going to create maybe bad decision making and more emotional things than need to be in the marketplace. How about what did I want to throw out here? You have anything you wanted to kind of throw out, Doug?
Well, Keith and I, we had a spirited debate yesterday. We had a spirited debate about does buy and hold work? And did you guys know what buy and hold is? It's basically where it's something we've been taught. You know, you buy, let's say, a good mutual fund. You pick the mutual fund. I won't pick it because my regulator would tell me don't do that. So do you know of a good mutual fund out there? You just pick that one and you hold it for the rest of your life. And that can work, especially if you got a 401k and you're putting money in it every month. You're buying at all different type of price points. That can work. It's not guaranteed to work. It's still speculative. But what Keith and I were talking about yesterday, and that he pointed out, and we could show you on graphs, we could show you on charts on this, is when your income, your job, when the money you make, when that spigot is either turned off or turned down, that money flow coming out of that spigot is reduced. Making sure you protect your assets is more important than ever. And that's right now, because the historical things that were safe just really aren't safe. And cash, having money out of the market, there are just times to do that. And what was Warren, I think it was Warren Buffett, said first rule, don't lose money or something like that. I mean, that's pretty tough to do, but you can do it. You can have some stops. You can have some parameters that say, you know what, this is what would cause us not to be an investor today. And so when we were talking about an uptrend, there's also the opposite of that. And that's when things aren't so good. And that's when you don't want to have risk on exposure, especially if you've turned off that income spigot. So Keith and I, one of the great things, and I'll credit my friend Heather over at Advisa Consulting for helping me with this, is you got to learn just to be straight up and candid and have some opinions. And you got to go back and forth. And that's what Keith and I did this week. And I think that was a lot of fun, Keith. I just wanted to highlight that I really enjoyed that this week.
Well, it's such a hard thing to think differently. And maybe a lot of people don't think differently. And I didn't until one of my last classes in graduate school, because all I thought was what I was taught. And to think differently means if all I thought was what I was taught, I wasn't really thinking. I was just receiving information and calling it my thoughts, right? And to think differently means to look objectively at a situation or a set of parameters and just evaluate it and see if it really makes sense. And I can probably argue pro or con on most things in the marketplace, and argue either side. And and have a strong opinion. And I think that's necessary because the market is an argument.
Mhm.
That there's
Every
a buyer
day.
and a seller, and they're
Every day.
arguing over what the value is. And just like that stock that went from 10 to 130 or whatever it was, I wouldn't pay 130 for that.
Argument about money is always intense too. I mean, that bid and ask price of the stock, that is always, that is real intense.
Yeah.
They're arguing over pennies.
Yeah. No, I went to find a new to us RV and was looking at one I'd buy and looking the guy in the face and made him an offer and he said he wouldn't take it. And so I took my checkbook and walked away.
That's right.
And so that's
Yeah, you can do that in the stock market.
yeah. And so
you don't have to hold that until it comes around.
yeah. So there's just thoughts that sometimes get stuck in our head that we've heard. And part of the reason, people will say dollar cost averaging works. That's where you put money in a regular increments and you buy and you buy and buy. But everything I have, I can't even see it down at the bottom of this. All that thick stuff there is disclaimers, and anything you get from an investment organization is going to have disclaimers. And they all say there's no guarantee that that strategy, even our introduction says that in there. And so things that have worked work until they don't. And so, and if you've been in the investment business for any period of time, you cling to things that work until they punch you in the face and they don't work, and you go, oh, that didn't work that time. And so that's a hard situation to learn from, but it causes us as advisors to just be cautious as we're looking at things on your behalf.
I think it causes us to be pretty optimistic too. Like,
Yeah.
When things stopped working literally and people didn't go into work in 2020, they didn't go to buildings, and conference calls over the internet like this started to catch on. That's optimistic. There's a solution out there for the problem at hand. That's the beauty of freedom and capitalism and idea thinking. And so that's something that just jazzes me up every day when I come in here. Is looking for those types of opportunities and thinking through those things for you all. And sometimes it just means doing nothing. We really like this guy. His name's Mark. I think he lives in North or South Carolina. I don't know where he lives. One of those Carolinas.
Myrtle Beach.
Myrtle Beach. or just north of there. Where is it?
South Carolina.
South Carolina? Okay.
Yeah.
Well, Mark, in the 90s, he went through I don't know if it was 2 years where he sat on cash. And this is a guy who's an aggressive stock trader. I mean, very speculative stock trader. But he's got a system, and the system kept him out of the market. And that system, even he's an optimistic guy, but that system kept him out of the market, kept his money safe.
Let's talk generational, Doug. In 2008, we had a recession that came through. It came from a lot of reasons. If I'm going to blame somebody, I usually blame the government, but the government made the lending rules so broad that people, all they had to do was fog a mirror to borrow money. And it was a problem with the banks, the government, and the individuals that caused a lot of that recession in 2008. That recession was kind of the first banking crisis that we'd had in a long time. Early on in my career in the late 80s, we lost an entire segment of the banking industry. They just all went out of business. And that was in the late 80s. There used to be, right now there's FDIC, Federal Depository Insurance Corporation. There was FSLIC, it was the Federal Savings and Loan Insurance Corporation. And it just went completely out of business. And so generationally,
What year was that?
89, 90 is when all those banks, there were hundreds and hundreds of banks that went out of business then. And a lot of it came out of Texas and worked its way up. But generationally, the benefit of multi-generational conversations is that you probably didn't know anything about that because you weren't around back then. And I could tell you the history of that. And so having multi-generational conversations really brings to light a lot of things that wouldn't otherwise maybe come to light. Because when I was 25, I thought I knew it all. Today, I know how much I don't know, right? And so what happened this year is the population of the millennials crossed over that of the baby boomers.
And I don't know the ages, but yes. Do you have them?
The baby boomers were born between 46 and 64. Before that, anything before 46, they call the silent generation. And from 65 to 80 is the Gen Xers, which is you, right? And then we have the millennials, 81 to 96. And then from 97 to I think it's 12 are the Gen Zers.
Yeah.
I have kids in both millennial and Gen Z, and they have different personalities, kind of comparable to that. But with that kind of evening out of the generations at that point, I think the baby boomers dominated the conversation for a long time because of the post World War II population.
Bunch of them.
Yeah.
Squeaky wheel gets the grease.
Yeah, and now you've got millennials are 21.9% of the population, Gen Xers are 19.7, baby boomers 21.45, and the Gen Zers are 20.35. So 80% of the population is pretty evenly spread over 4 generations, which the baby boomers, I heard it say, is like a pig going through a snake. This is leveling out our demographics as a country in a more normalized way, which I think will be healthy in the long haul. But what this means, if you take that banking crisis of 2008, come forward to today, the housing crisis turned the spigot off on new houses. And so probably for the last 13, 14 years, there's been about 1 million houses per year less than what the demand is creating because of these younger people coming behind us. So why that's critical in thinking is that the demographic shift is probably going to make housing things really interesting. It's going to make the demand for houses probably harder than you've experienced in a while. The other thing that's going to be out there is our lovely government's going to spend $1 trillion plus or whatever this infrastructure bill is going to end up kind of piping into the economy. It's probably going to cause some inflation in a lot of areas that we haven't considered. If you're going to spend, some portion of that $1 trillion building roads and bridges, where do you think the materials and the people are going to come from? They're going to be the people that you're competing to build these houses. And so it's going to be a lot of competition with extra dollars pushing the price of things up. So that's what I throw out there with the demographics right now. I think the possibility for intergenerational dialogues and just encouragement are huge out there today.
Yeah, I think so too. And I was just reaching out to one of our clients' kids who's, I don't know if he's 15 years, maybe 20 years younger than me. And hey, we are cheering you on. I'm mainly cheering you on because you're bringing new ideas. You're bringing new ideas that have never been into this marketplace before.
Well, you were cheering on one of our clients that was 25 or more years older than you yesterday.
Yeah.
But he also brings new ideas to you because they are ideas that you hadn't seen. And so both sides of that equation are huge. And the opportunity to make connections like that are huge. I have one friend that's in his late 80s that I call on a regular basis because he causes me to think in ways that I wouldn't otherwise. And then we've got Eric, who's joined us, that's quite a bit younger than me. And Eric causes me to, I say something about technology, and next thing I know, it's laying here on the desk going, what do I do with this thing now? And so those intergenerational relationships are really incredible.
That's all I got, Keith.
Well, I could talk all day, but you guys need to get out and enjoy the weather. In case it rains more, you can get your walks in now, get some fresh air, and just know we're here for you should you have questions. It's great to have Doug back here. I enjoyed having Amanda here sitting beside me, but Doug is back at it and we are here for you. So enjoy your weekend and we'll see you before long.
Bye-bye.